I'm going to break down step by step just exactly how the gold markets are going to be moving going into 2023. It's a full strategy on how you can catch massive, massive trades. So let's get straight into it. I'm going to break down this whole massive 1 to 17 trade here. The first part of the strategy is higher time frame wise on the daily candles. What are they indicating to us about what is going to happen with market structure? So on the daily, what we can see is that we've had a strong push to the upside, bullish candles, strong push to the upside, but we tapped into a key higher time frame zone. This was a weekly high bank zone, and what we'd had in the previous day. So this was the previous daily candle, and we took a trade on this day here. So the previous daily candle tapped into our higher time frame key weekly high zone, and it ended up bearish with a long upper wick. So this is a rejection of this right here, key higher time frame zone, and we'd made all this space here, which I'll explain in a second on the 4 hour. So initially the daily is telling us we've pushed up, we've tapped into a weekly high zone, and now we've rejected. So we're looking to fall back off. Because if I show you on the 4 hour, what often happens is that once we get push, we get a correction. So here you can see push, correction, and this time it actually tapped into the weekly high zone again, and that's when we saw the huge drop off. So we're looking to replicate that again in this spot here, but again you can see push, some sort of reaction to it. So all we're looking for going off the daily is a drop to the downside, but can the 4 hour agree with this? And this is when you've got to bring market structure in. So at this point in time, there was nothing, but what I'm going to do is I'm going to skip it forward 2 4 hour candles until just before US session. So this is just before US session on this day here actually came about. So we took the trade on this day. This is right before US session. So going over to the 4 hour, can this indicate to us what we're going to be doing? And yes, it can, because if I explain it in greater detail, what happened, we've pushed up into the zone. We've then created this whole range box here. So we've pushed up and we've ranged about, indicating we're rejecting the zone. But can we start selling in the US session? No, we cannot, because there's no bearish market structure on the 4 hour. What we need is a break of this low here, because price pushed up. This was then the zone that we had. This was a higher low. So at this point in time, until that is broken, we cannot sell. So we need that to be broken. Then what that would look like, that would be, if I just zone it out a bit, that would be a push up to the zone like this. We've boxed around for a bit, we've messed about, and then we're looking to catch the big sell to the downside. And that's only once this range here has been broken and the 4 hour has gone bearish. So just before US session opened, we were not bearish. So our plan was to wait until a break either side happened. We could have been bullish if we broke the upside, but because we broke this low here, that is what we're hoping for. So if I just take this over to the lower time frames, that would be a break off of that low right there. So I've just taken that across from the 4 hour. It would be a break of that low. Once we've broken below that low, we could then start to sell. But now we're on the lower time frames, which is where it gets a bit more interesting. I'm going to show you what actually happened in the days leading up to this day. So what we had was down here on Thursday, the 15th of December, we bottomed out in US session and we created this US bank zone here, which if I take it across, you'll see what happened is that in the next bank zones, what happened? Price pushed above, tapped into the zone and pushed out in US session. So US session is this one in pink here. The ones in black and green, you don't need to take much care of because gold is a US session pair. So we're focusing on what happens in US session. So we created a bank zone on the 15th. We then broke above it, retested it, made it a support zone. And then again, we tapped into it the day after, made it a support zone once again. So all that happened is that we created this bank zone in, if I just draw it on, we created this bank zone in US, we've pushed down. In the sessions prior, we then pushed above, US retested it, then pushed up, rejecting the bank zone. The next day, we came into the zone again. Definitely this time it rejected. We made a bank zone, then we pushed all the way back off, up to the upside up there, into the previous high zones up there, and that is where we started to get the rejections. So this zone here was of high importance. So if we just remove this, now also on the lower time frames, we can start to analyze what actually happened in the sessions prior. So in the day before, remember, this is just before US opened. In the day before, what happened? Well, price pushed up like this. Price was bullish, it pushed up, but it failed to have any bullish momentum and it came all the way back down, indicating that in US session, the bearish momentum had stepped in. And what did it do? It tapped into a US bank zone up there and it failed to break above and it pushed back down. So that was in the daily candle. You could also see that as well. So what we have here is we have a US zone just up here. So price could tap into that and then drop to the downside, but we're not focusing on that because first we need this zone here to break. Remember, off the 4 hour, we need that zone there to break. So what actually are we looking for going into US session? So we're looking for a break of the low there so we can start to sell. But where would we be selling from once that low there has been broken? Well, this is where we can start to bring bank zones in. So the previous day, we created this bank zone here, drag that across. If I take this across, you'll see the last time that US traded this price, it was also a bank zone in there. So if I go onto the 15-minute now, so you need to be on the 15-minute just as the session is opening. I'm actually going to tighten this up a little bit. So if I just bring this down and tighten this up. So that is the bank zone that we are focusing on going into the session. So the plan is now, all we need is a push to the downside, a break of this low here to put us in bearish market structure. If we go back on the 4 hour, so this low here is this low here on the 4 hour. So a break of that would be a push to the bearish momentum. And then we're just looking for a pullback to this zone here. And then we're going to be selling. So let's have a look at the first kind of half an hour of the US session. What's it do? It taps into this bank zone, but are we going to be selling from here? No, we're not. Even though there's a good chance it will reject and go to the downside, the 4 hour was not actually bearish yet. So we couldn't sell. It was not valid as part of the trading strategy. And what happens now? Well, we do get, if I just take it back one, we get this 50-minute candle here, which was a news candle. There was actually bearish news for gold, so it added to the bias that we were bearish. And what did this candle do here? This was so important. It was at 1:30, often the most important candle. It broke this low here, which on the 4 hour, it broke this low here. I won't play the 4 hour candle because it will ruin what happens. But you can see on the 50-minute, it did clearly break below. It was a strong break below. If I show you where it went to down here, you can see on the 4 hour, it's a clear break out of the zone, indicating the 4 hour had now gone bearish and we'd had a 15-minute close below the US session bank zone. So now we can go on the 5-minute and start to sell. So what actually do we see? Well, we got the break below, we then got the pullback, and we got this 5-minute candle here. This 5-minute candle, it went back into the bank zone, the US session bank zone, and then it closed like this with a long upper wick up there, indicating we tested the zone, then come back down as a rejection. So you could have sold from that point. Your stop just above the upper wick of the candle up there. And now in terms of targets, there was many targets you could have had, but let's just say you were trying to target all the way down to the initial bank zone in which we bounced off of in the previous week to correct all that big move to the downside on the 4 hour that we always see. So to correct all of this move here. And let's have a look at what happened. So I'll put it back on the 15-minute time frame and play out exactly what happened. So it dropped all the way to the downside like that, and it came in. That was a 1-to-17 risk reward, a giant trade. Now I'll play out the 4 hour. What happened on the 4 hour? You can see it dropped all the way down to the bank zone, and then it did end up rejecting. If I just play this forward a bit, it ended up rejecting this bank zone because this is how the gold markets move, bank zone to bank zone. And in this strategy, you're just using the higher time frames to aid you in this. So the daily candle, you can see it was a very strong bearish candle after we tapped into the key higher time frame weekly bank zone, and it went all the way down there. So that is how you could have caught a huge 1-to-16 sell on gold using the gold strategy.